If more than a person or two touches your books, QuickBooks and Xero can sit about $700 a year apart for the exact same work, and for a lot of businesses, the cheaper one is the wrong choice. Price is the loudest part of this decision, and also the least useful part. What actually decides? It comes down to 4 questions. And the first one has nothing to do with money. The first question is simply this: who does your accountant use? Get that wrong, and you have not just wasted a subscription, you have bought yourself the afternoon next spring when your accountant hands back a cleanup bill because your software does not speak their language. So before you put a card on file for either one, let's walk the 4 questions that decide this in plain English until you land on the one that actually fits how you run your business. This video is for the owner who already knows they need real accounting software and has it down to these 2. Maybe you are on QuickBooks right now, and the latest price increase finally pushed you to look around. Or maybe you have never run either one, and every comparison you open is wall-to-wall with accounting jargon you did not sign up to learn. Both of these are full double-entry accounting platforms built for U.S. small businesses, and both will connect to your bank, pull your transactions in, sort them, and turn them into clean reports. Neither one is going to fail at the basics. So this is not about which can do the job. It is about which one fits your job. Before the questions, one thing worth clearing out of the way: ignore QuickBooks' $20 solopreneur plan for this decision. That tier is single entry, closer to a glorified spreadsheet, and it is not really competing with Xero at all. The fair comparison starts one step up at QuickBooks Simple Start. This is the question that quietly decides the rest, so it goes first. QuickBooks owns roughly 80% of the U.S. small business accounting market, and almost every U.S. accountant and bookkeeper works in it daily. Xero is the strong challenger at somewhere around 13 to 18% and growing fast. And it runs as the default in places like Australia and New Zealand. But in the U.S., the odds your accountant already lives in QuickBooks are high. And that matters more than any single feature for a reason most comparison charts skip right over. One owner summed up the whole thing in a single line. They used both Xero and QuickBooks, liked Xero more, and stayed on QuickBooks anyway because their accountant preferred it. When you hand your accountant QuickBooks at tax time, the year is smooth. Hand them software they do not know, and some of them will charge you extra to deal with it, or quietly ask you to switch. So the honest version of question 1 is not which tool is better. It is whether you want to spend your year fighting the person who files your taxes. If you have an accountant now, or you know you will hire one, ask them what they use before you decide anything else, because that one conversation can settle this whole video. And if you do not have an accountant yet, let that 80% number be your default. QuickBooks is the one most of them already know, so starting there keeps the door open later. This is where that $700 gap comes from. Xero gives you unlimited users on every single plan and never charges you by the seat. QuickBooks works the opposite way, capping users by tier: 1 on Simple Start, 3 on Essentials, 5 on Plus, and 25 on Advanced. One fair thing to know before you judge that, though: QuickBooks hands your accountant their own free login on top of the cap, so the limit really applies to your own staff, not your bookkeeper. Xero lets you bring your accountant in for free too, and since its users are unlimited anyway, it never costs you a seat there either, which means the seat math only bites once your team needs in. Picture a 5-person shop where everyone touches the books. On Xero, that is the growing plan at $55 a month. While on QuickBooks, those same 5 users push you on to Plus at $115. Same 5 people, same work, about $720 a year apart, and the jump only gets steeper from there. Adding a 6th person forces you all the way up to Advanced at $275 a month, just to let one more human log in. Now, if it is only ever you and your accountant, that whole gap closes and Simple Start is plenty. The unlimited user advantage is real, but it is real for teams, not for solo owners. So be honest with yourself about which one you actually are, because paying for seats you will never fill is one of the quietest ways a small business overspends on software. If you carry inventory, this question can outrank the other three. QuickBooks has real inventory tracking built in from the Plus plan, where it counts your stock, tracks your cost of goods, warns you when you are running low, and turns purchase orders into bills. Xero includes only basic inventory on its plans, and the serious version arrives as a $39 a month add-on called Inventory Plus. So if you sell physical products and you want that handled inside your accounting software, QuickBooks is the more natural home. A word of honest caution if you sell at real volume online, though. Owners running heavy Shopify or Amazon operations find that neither QuickBooks nor Xero handles high volume e commerce cleanly on its own, and both end up needing a dedicated inventory tool bolted on anyway. So if that is you, do not pick either one expecting it to be the whole answer. The accounting platform is only ever the ledger underneath, and the inventory system sits on top of it. If you have employees, this one is refreshingly simple. QuickBooks has its own payroll built right in, so you add it on and the payroll numbers flow straight into your books with no syncing, no second login, and no month-end surprise where two systems disagree. Xero took a different road in the US, dropping its own payroll engine and instead connecting to Gusto, a well-liked payroll tool, through an integration that lives right inside Xero. Neither approach is wrong. They just suit different owners. If you want one platform that handles books and payroll together, QuickBooks keeps everything under one roof. But if you already run Gusto or you do not mind two tools that talk to each other, Xero plus Gusto works just as cleanly. Either way, settle which kind of setup you are signing up for before payday, not after. Now we get to the part everyone skips ahead to. These are the real, regular prices, not the promo banners that expire in 3 months and quietly renew at full freight. QuickBooks runs $38 a month for Simple Start, $75 for Essentials, $115 for Plus, and $275 for Advanced. Xero comes in lower across the board at $25 for Early, $55 for Growing, and $90 for Established, with no seat charges layered on top of any of them. So on paper, Xero gets cheaper the more your team grows, with one catch worth knowing on its entry plan. Early caps you at 20 invoices and 5 bills a month, which a busy business outgrows fast before landing on Growing. The cheaper option has a habit it never puts on the banner. Xero raises its prices too, and not gently. One longtime user watched their entry plan climb from $11 to $15 to $20 over a couple of years, while the features they relied on quietly drifted up into pricier tiers. Switching just to dodge a QuickBooks increase, in other words, can drop you right back into the same spot a year later, which is why the sticker price is the wrong thing to choose on. What you actually want is the setup you will not be fighting 2 years from now. Keep a clear head about one more piece of marketing too, and that is AI. Both companies are bolting it on right now. QuickBooks through Intuit Assist and Xero through a tool called Jax that can draft an invoice from a text message and match the easy bank lines for you. It is genuinely handy, and plenty of owners are skeptical of it too, which is fair enough. These features speed up what you already do without changing which tool actually fits you. A general assistant like ChatGPT can help you make sense of a report or Word, an invoice, but it will not keep your books or reconcile your account for you. So choose the platform on the 4 questions first, and let the AI ride along on whichever one you land on. So, putting it all together, it shakes out like this. Choose QuickBooks if your accountant uses it, if you carry real inventory, or if you want payroll and books under one roof. It is also the safer bet when you expect to grow into heavier reporting down the line. Standard counts for a lot when your accountant is the one who has to live inside it with you. Choose Xero if you are a smaller or service-based business that wants the cleaner, simpler screen. It pulls ahead too, when several people need access without paying for each seat, and when no accountant is insisting on QuickBooks. Owners who are not accountants themselves often find it easier to look at and move around in, and a CPA who switched after 6 years on QuickBooks called it a breath of fresh air. And if you are still stuck between the two, let that first question break the tie. The accountant relationship outlives the software decision by years. And going wrong there costs you real money and real Saturdays. Get that part right, and you almost cannot pick badly. If you are already on one of them and eyeing the other, the fear is usually the same, that switching will be a nightmare. The CPA who moved from QuickBooks to Xero was honest about it. It was not as simple as pressing one button, but it turned out far more doable than she had feared, and the long-term payoff was worth the effort. The hard part is almost never the data itself. It is the muscle memory of where everything used to live, which fades faster than you would think. So give yourself an afternoon instead of bracing for a lost weekend. A couple of alternatives are worth knowing about too, even with the spotlight on these two. For genuinely small needs, Wave does free accounting that is plenty for a side business. And for someone who mostly sends invoices and works as a freelancer, FreshBooks is built around exactly that. Both are worth a look, just not worth switching your whole plan over. And one last thing, because it is the real reason any of this matters, whichever one you choose, the job underneath is the same. Your bank feed comes in, gets matched, and reconciles itself. So the books get done without you hunched over them by hand at 11 at night. You get your time back, and you stop second-guessing whether the numbers are even right. To try Xero, the link below gives you a free month to feel out the interface before you commit. And yes, that is an affiliate link, so it supports this channel at no extra cost to you. QuickBooks runs its own free trial too, link down there as well. Whichever way you go, you are choosing on what actually fits the way you run your business, not on whoever is shouting the biggest discount this month. Either way, drop a comment with which way you leaned and what tipped it, because the next person stuck on this same decision will read it.